Okay, so fast forward, we saw some of the reasons why the two balances will be different, right? As I depicted to you um, in the picture, where you see that the balance the bank is keeping on the bank statement, okay, is different from what the business is keeping in its cash book, especially or specifically the bank column, right? Uh-huh. So some of the reasons we saw the last time included, well, I think I should pick this from my professors, especially Alexia, Deladem, and Edem. So professors, what were some of the reasons we looked at the last time? The reasons that will cause the difference between the two balances. Edem, Della, and Alexia. I'm hoping to hear from you. Well, I don't want to mention names, so this one, just put up your hand and tell us. Okay, so Alexia put something in the chat that's dishonored checks. Dishonored checks. Okay, thank you very much, Alexia. Dishonored checks. Yes, what again? What again? Um, we also have uncredited checks from Deladem. Okay. And then errors made by the bank. Great. So thank you very much. So Prof. Charles and Prof. Ella, the reason why the two balances would disagree, right, includes dishonor check. Okay, standing order from Edem as well. Thank you very much, professors. So let me scroll down to the reasons so that we can get to them. I think they were in about they were about 10 reasons, yes. So I just want my Professor Charles and Ella to appreciate. Okay. So we had unpresented checks is one of them. Uncredited checks. Okay. I'll explain them because in doing the reconciliation, we would have to know why we add all this. So unpresented checks, uncredited checks, dishonored checks, standing order. Okay. Standing order. Then okay, Prof. Ashley is also here. We have bank charges, direct payment, or what we call direct debits, transfers, and then errors made by the bank and errors made by the bookkeeper, right, or the accountant of the business. So these were the 10 causes of the difference that we saw. Okay. Now, it doesn't end there when you know the causes. You then have to look at how to reconcile, right? The two balances. So for the benefit of my other professors, in fact, for the benefit of all of us, I want to do this thing again, taking the reasons one after the other, and then look at how we do the reconciliation. Okay, so this picture here is to, again, give you another perspective that the cash book and the bank statement are supposed to have the same records, right? What we do in the cash book should be done in the bank statement. So this picture you see here, you see a cash book, January, right? And this is our debit side and this is our credit side. So the receipts, which is the same as the inflows, and the payment side, which is the same as outflows, or what we know to be our debits and credits in our T account, right? Let me put in some. Okay. So this is your T, the normal T account that we know, right? With your debit side and the credit side. So this is our bank account. Then this is the bank statement. Now look at what is interesting. The credit side of your bank statement corresponds to the debit side of your bank statement. And I think you appreciate that the picture I showed you earlier, right? So you see, the debit side of your cash book correspond with the credit side of your bank statement. And then the credit side of your cash book corresponds with the debit side of your bank statement. So whatever you put at the credit side or payment side of your cash book should be seen at the withdrawal or debit side of your bank statement. Please note that thing. It can be a bit confusing, right? So when you credit your cash book, your bank will debit you, because if we credit our cash book, it means we are making payments. And if you are making payments, the bank would withdraw from your account, right? So as I showed you earlier, the withdrawal on your bank statement, your withdrawal is the debit, right? Or the outflow. Okay. And then the deposit is the inflow or the credit. Okay. So likewise, if you are receiving money into your cash book bank account, you debit, your bank would credit you. So for the bank, if you are receiving money, they credit your account on the bank statements. So note that. So let's do some little comparison here. You would see that this cash book has a balance of 234 here, right? It is the same balance you see on the bank statement, right? 234. Now you also realize that we have Janet here. We made payment to Janet 320. You come to the bank statement, you see 320 at the debit side. We also paid Agnes 45, right? And you see that 45 also here at the debit side. So it's like whatever you see at the credit side should be at the debit side here on the bank statement. And whatever you see at the debit side of your card should be seen at the credit side. So please note that comparison for me, because that will help us to identify these unpresented checks and uncredited checks. Having said that, let me go ahead into that. So uncredited checks, what did we say about uncredited checks? Professors, we said that uncredited checks are checks that the business has received. So we have received the check, and for that matter, have debited our cash book. So it's expected that the bank will credit it. So let me go to this page for you to see. So you see, we have received the check, and for that matter, we have debited the check. Okay, we have debited the check in our cash book. So let me give an example here. We received a check on the 5th of February from AC. So it's expected that this check, let's say 1,000 Ghana cedis, will be brought to the bank for it to be credited, because when we receive the check, the bank will have to credit the account. So if this check has not been credited by the bank, you would all realize that our balance on the bank statement will be saying 3,000. Okay. But our cash book will be saying 4,000, because we already had 3,000 balance. We have received a check, so 4,000. So that is causing the difference between these two balances. And as I mentioned, that is the uncredited checks. So checks that we have received and debited, but the bank has not credited. So professors, if you want to find uncredited checks, what you do is to compare the debit side of your cash book to the credit side of your bank statement. Please, I think you should all note that. You compare the debit side of your cash book to the credit side. To the credit side of the bank statement. So any check that is debited here but not credited here is uncredited check. Great. So the picture I showed earlier, let's see if we can find some uncredited checks here. So checks that have been debited but are not here. So please follow through with me as I take the figures. Now this is necessary because some of the questions come in this form. They'll give you the cash book and the bank statement. So you would have to compare and find your uncredited checks as well as compare and find your unpresented checks. So that's why I'm taking time to go through with these things. So let's look at it. So we have, what do you call it? Opening balance, that one we have confirmed. You see 1,560 from Harold. Come to your bank statement, you see that it has been what? Credited, right? So this one, you take them off. Then you go to Love G, 810. Let's check the bank statement if it is there. So I need to scroll down a bit. So Love G. Okay. So you see Love G, also 810, right? In the bank statement. So that one has also been credited. Let's go to the next one, Baby G, 865. So go. You see another 865, right? Check received. So Baby G has also been credited. You go to Xavier, 2,340. Let's check the bank statement. Yes, it is there, 2,340. The next one is Lisa, 54. Yes, we have Lisa, 54. We have Big Bank, 124. 124. Big Bank is there, right? And then we have Koala, right? Koala, 1,566. Let's check the bank statement. So you see, we don't see that of Koala, 1,566. So that will be called an uncredited check, right? Okay. So we know that one. Now, you appreciate that because of these reasons, you see, the closing balance on your cash book, 2,438, is different from, right, the closing balance on the bank statement, 2,546. And we've just identified that a check from Koala has not been credited by the bank. Okay. Now, the opposite is for the unpresented check. The unpresented check. Unpresented check. So for that one, the business has made payment to a supplier. Okay. But the supplier has not presented it to the bank for payment. So tautologically, I should say that unpresented check is the same as undebited check. The bank has not debited. The opposite of uncredited, right? But we don't use the term undebited checks because it sounds a bit funny. So we say unpresented check. So this time, if you want to find your unpresented checks, you compare the credit side of your cash book to the debit side of your bank statement. So again, let's go through the process. Okay, so this time we are comparing this side to the debit side. So let's start. You have Janet 320, you see 320 here, right? You have 45 Agnes, you see 45 here. Good. The next one is 1,800 from Maxim. You see 1,800 here. Now note, when you are doing the comparison, your focus is on the amount. If you check with the details, you see maximum here, but here you don't see maximum, but you see the 1,800. So that's what you focus on, not necessarily the details, but that will be misleading sometimes. You have Wonderland, you have 200 here, right? From Wonderland. Good. We'll go to the next one, which is from Nobel, 1,567. You see it here, 1,567. Then you have Gabriel, 311. So yes, that one too is here, 311. Then you have from Faust, I don't know if it's Faustina, but Faust, 98. Let's check the bank statement. 98 is also here, right? Is it Logipo? 234. Let's check that one. 234. So you see that one is not here. So that is an unpresented check. The bank has not debited, or the supplier has not brought it for it to be withdrawn from our bank account, right? So you note that figure somewhere, as well as 540 paid to Dizzy. That one too is not in the bank statement. So for this illustration or this picture, we have one uncredited check and two unpresented checks. Professors, let me pause for questions. Any question? Any question? Okay, so what I want you to appreciate is that when you are looking for your uncredited checks, what do? You compare the debit side of your cash book to the credit side of your bank statement. Please remember this, and you find it easy when you are solving some illustrations. And for unpresented checks, you compare the credit side of the cash book to the debit side of the bank statement. So please note these two, because I'll give you some questions where you would have to do the comparison and get your uncredited checks and unpresented checks. Okay. Now, if you get these two, right, as I've explained, the remaining courses, i.e. standing order, bank charges, and I think I would have to give the benefit of doubt to my Professor Charles and Ella. Okay, so I'll be explaining some of them. So when we talk of bank charges means the bank is, rendering services to the customer and has to charge you something. If you go to the bank will give you a checkbook, ATM card, okay? So those services the bank is rendering, they charge you, the customer, and that's bank charges. So bank charges simply refers to fees charged by a bank for rendering services to the account holder. I think we even know that on Momo, MTN Momo, there are what charges, or Telecel, cash, whatever, there are charges. When you transfer money, they charge you small. And if you are doing cash out, they charge you small. Now, e-levy is no more. Okay. But even e-levy was not charged by the telcos, it was by the government. But the telcos also charge you on this cash out and whatever, so that they can get money to do their business. So that's bank charges. Now, how does it make the two balances different? So the bank would charge the customer, say 5 cedi per month, okay? But the customer may not be aware that the bank has charged 5 cedis. So the customer in his or her records will have maybe 305 cedis. He goes to the bank and the bank statement is showing 300. So he will do the investigation and realize that, oh, because the bank has charged him 5 cedis for the services they are rendering. Okay. So bank charges is a legitimate deduction done by the bank. So because of that, the customer would have to go to his or her cash book and make an entry there. But the bank has charged you for giving you a checkbook. You can't fight over it. So you have to go to your cash book and record that you have paid for bank charges. Okay, so the remaining reasons, i.e., and please take note of them. Let me put those things here. Bank charges. These ones, what we do is we update them in the cash book. So update in the cash book. Right? So bank charges is one of them. The other one is the standing order. Let me see if the sample I have here has the bank charges. Okay, we don't have bank charges here. I think I showed another one. Let me see. The one I showed, the sample. Let me check. Okay. Good. So you see, some banks refer to it as commission or cost of transaction, COT, cost of transaction, or sometimes you see fees. So if you look at this bank statement, you see fees, right? Overdraft, 5 cedis, and then another fees monthly. So there's a monthly fee they charge on the account, 5 cedis. So these are the bank charges we are talking about. The bank will deduct it from you because they are giving you some services, right? Okay. So when you see it like this, you would have to go to your cash book and update your cash book. So that's why I put in here updates in your cash book, right? Now, the standing order is an instruction. The customer gives such instruction to the bank for the bank to make a regular payment on their behalf. A typical example is, let's say you have DSTV in your house and you want your bank to monthly subscribe DSTV for you. So it's a matter of drafting that instruction, sign it. When you take it to the bank every month, they will pay your DSTV subscription for you, right? Now, what happens is that sometimes the customer forgets himself or herself that the bank is paying something on their behalf. So in their cash book, they don't update it. So when they go to the bank and they find out that, oh, okay, I asked you to pay for my DSTV bill, so you have done that. Then they now come to their cash book to do what? Update it. So standing order is also updated in the cash book. Then we have what we call credit transfer. So credit transfer simply means your bank account has been credited, but you are not aware. So a simple example is, as you are in class right now with me, maybe your parent has credited your bank account. He has deposited money into your bank account. You don't know. So you might be thinking that, oh, I have 200 cedis in my account. Later you go and check and it is 500 cedis. You would investigate and see that, oh, it's your daddy who transferred what? Money into your account. So if you realize that, or if you see that, you go to your cash book and update it there. For this is a legitimate transaction. Okay. So that's credit transfer, sometimes referred to as direct credits. Direct credits. So the credit was done directly. You were not aware. The opposite is a debit transfer. A debit transfer or direct debit. So this one, the bank too has debited you. You are not aware, or some payments have been made out of your bank account, but you are not aware. Now, some people argue that then say, is this not the same as standing order? The difference is that for standing order, you issue the instruction for the payment to be done. But for the debit transfer, you didn't issue any instruction. A typical example of direct debit was the e-levy. The customer does not instruct the bank to deduct e-levy, but it's a government what policy. So by law, when you transact business on your bank account, whatever, you pay that e-levy. Okay. So the bank will directly what debit you. So sometimes I remember when it started, the banks were not deducting because they were now, installing and, doing all the necessaries to be able to run that government policy on their platform. So I remember one day I was there, I thought I had like 2,000 cedis and some coins in my bank account. Then I saw e-levy deductions. Boom. Right? So that's a typical debit transfer or direct debit. Professors, the way you are quiet, do you understand what I'm saying, or you are just listening to a preacher who is giving you all the sermon from the Old Testament to the New Testament? Let me hear some reactions, because it's like I'm talking too much. Charles, Deladem, Ella, Aram, and Na Ashu. Am I not preaching too much? Or you love the preaching? Let me hear something from my professors. Prof. Deladem.
Yes, sir.
Okay, so are you following? Are you okay? Am I confusing you?
Sir, please, I'm fine.
Okay. Professor Charles Kwache, what is your story? Okay, I think the network. Okay. I can't hear what he's saying, but I think he says, say I'm okay. I'll take it like that. Professor Ella, Emanuela Ade, what's your experience? So far, so good. Are you picking some things from what I'm saying, or you are confused? Which is which?
Sir, I'm okay.
Okay, that's fine. I think majority are saying they are okay, so I would say same for Adam and Ashley. But if you have any question along the line, please ask. Okay, so how many to go? 10 courses. We have done 1, 2, 3, 4, 5, 6. So 4 to go. The next one is dividend. Dividend or interest received. So we are saying that as a customer of a bank, okay, dividend is when you invest in a company like MTN Ghana or any company, right? And they are paying you interest for the money you have invested. That is the dividend, right? So if you go and buy shares in a company and the company is paying you some NOCO fee for your investment, that is your dividend. Or sometimes the bank can even give you interest on your bank account. I think a common one is when MTN credits you with a MTN, they call it say Momo interest or something. I remember last time they sent me 3 cedis as interest on my account. So that is the dividend or the interest received. If this thing is deposited in your bank account, you only go and update it in your cash book, right? So imagine as a business, let's say you have shares in ADB or you have bought treasury bill, let me say that. You have bought treasury bill and they are paying your interest into your bank account. So immediately you see that, you also go to your cash book, bank account, and then you do the needful there. The next one, oh, I think one is skipping me. 1, 2, 3, 4, 5. 6, 7, 3. So the next 3, we have errors made by the bank and errors made by the bookkeeper, and there's a last item. Dishonored check. Good. Dishonored check. Now, professors, the dishonored check simply means that you took a check to the bank. The bank says, we will not pay. Okay? You gave a check to, or your debtors rather, your customers gave you a check, and when you took it to the bank says, no, we cannot pay this check. So a dishonored check is a check the bank has refused to pay. And there are reasons why the bank will refuse to pay. Example, if the date on it is wrong, right? So you write 51st September 2007. Nobody will pay that check. We don't have anything like 51st September. Or currently we are in 2025 June. Then you go and quote a date, 1st December 2025. The bank will not pay. So if the date is wrong, that could be a reason. 2, if the signature on the check is wrong, right? Wrong signature, the bank will not pay. In fact, if the check is torn or crumpled, the bank will not pay. If you send any dirty, oily check there, the bank will not pay. Then if the amount in words is different from the amount in figures, I'm supposed to show you a picture of a check, but I'm sure at least all of you here have seen a check before. If not, I'll show you one. There's a column for amount in words and then amount in figures. If those two disagree, the bank will not pay. And then finally, if the balance on the account is insufficient, imagine you have 2 cedi in your account and you are going to withdraw 50,000 Ghana cedis. You know this one is not possible. So the bank will dishonor such a check. So if it happens, you have to go to your cash book and do the correction there. Now, students sometimes ask the question, say, so the dishonored check, is it only the check from your customers? The answer is yes, because as a business, you cannot give a check to your creditor or supplier for it to be dishonored. That comes with serious business implication. So dishonored check is always coming from our customers, right? And not a check that we will issue for payment, which will be dishonored. That is absolutely not acceptable. As for your customers, they can give you a check, you go and the check will bounce. A common term we use is the check has bounced. Yeah, bounce a check, which means it was not honored. Okay. Now the last one is errors made by the bookkeeper. Okay, so if the bookkeeper is the one preparing the cash book, right? Or the accountant of the business. If he or she makes mistakes, we would have to update our cash book or adjust the cash book, right? So these 1, 2, 3, 4, 5, 6, 7, they are adjusted or updated in the cash book. And then this 1, 2, and the last one, which is error made by the bank. The bank also may make mistakes. Sometimes you go to a bank, the teller is so confused. You mention your account number, he types a different number, right? So the bank can also make errors. Most of their errors are either they wrongly debit the account or they wrongly credit the account. So we call it wrong debit and wrong credits. So you see that I have separated the courses, 10 of them, but 7 here and 3 here, right? The 3 here are what we adjust on the bank reconciliation statement. And then the 7 here, we adjust them in the cash book. Professors, note this again. These 1, 2, 3, 4, 5, 6, 7. Bank charges, standing order, credit transfer, debit transfer, dividend, dishonest check, and errors made by the bookkeeper, we adjust them in the cash book. If you are confused about the errors made by the bookkeeper, example, the bookkeeper might be recording some money received from a customer, maybe 1,005, and then he'll go and write 1,002. Okay, so those are some of the errors. Or maybe he was supposed to debit the cash book, he went to credit it, right? And then the 3, uncredited check, unpresented check, and the errors made by the bank, i.e. wrong debit, wrong credit. You adjust them or you work on them in the reconciliation statement. Okay. Now, what is next is for us to look at this adjusted cash book and how we adjust these 7 things, and also look at the reconciliation statement. But I'll pick the adjusted cash book first before the reconciliation statement. Professors, any question? If you are not clear about an explanation on either the standing order, the bank charges, debit transfer, just let me know so that I will deal with this for you. Okay. Professor C said all is well. Okay, so if all is well, let's meet in the final session and finish up with the format of the adjusted cash book and the format of the bank statement. Bank reconciliation statement. So see you in the last session. So go and check on the third session details and log in with it. Thank you.